Welcome, traders, to another Tickmill trading update with me, Patrick Manley. Want to update the S&P 500 view using the emini futures contract and put together a trading plan for the session ahead. Before we jump into the charts on the macro side of the equation is obviously US CPI. PPI came in weaker than expected yesterday and obviously added to the bid that we are currently seeing in the markets. Today with the CPI, Goldman are looking for 0.13% to 0.18% on the month over month and anticipating a gain in the S&P 500 of 0.75% on the session. That's their favorite scenario. This is shared through my daily market outlook. If we just run on to the group here, I'll show you where you can access that. You can either get it through the Tickmill blog, where I post this daily, or through the Tickmill Futures and Options Facebook group, again where it's reposted for members. So that said, from a technical perspective, we are now testing the weekly volume weighted average price and the weekly value area high at these 54.50, 54.60s. And this is going to be a key area from here up to the 55.08 is a key zone. If we are to see a potential another leg to the downside in terms of the correction scenario that we're currently using, but at this stage, that's up for grabs here now as we are moving into positive territory, bullish scenario on the weekly time frame, and we still obviously have it on the daily time frame, but we are still trading below the corrective trend channel resistance at 55.06. The high volume node on the daily time frame is 54.85. So this the CPI print today, I would anticipate, is really going to define whether or not we roll over this week and take another leg to the downside, or this ignites further upside momentum, and then we start to think about a move back up to the 5600 level. Moving to the intraday setup. So on the weekly, the 4-hour plan that I shared on Monday was for a test into the resistance area, the 54.20s, 54.30s. We did test into there, and we did get a reaction from there about 30 to 40 handles of pullback before once again extending higher. So we didn't quite get back to the weekly bull bear zone, and we are now taking out the resistance as I thought we might on the start of the week. And now we're targeting this trend channel resistance, weekly projected range resistance, and it's going to be key really to see now if we can get into that area and see if sellers reemerge. Goldman, due to the implied volatility, current S&P 500 implied volatility is for about a plus or minus 1% move on today's session. So we can see potentially 55 points of movement in either direction today. So if we use yesterday's close, that would give us a move up into the 54.90s to 5500 level. Beyond there, we have that 55.12 to 55.20. It's really, this is the key resistance area for me now. If we don't see bearish reversal patterns from this area, then I think we can then start to be moving to certainly a more constructive view. And like I say, a look at the 5600 level. Bull bear zone for today's session is going to be this 5400 to 5390. So any pullback into that area, bullish reversal patterns there. If that zone is defended, then that sets up for a test of these key resistances just shy of 5500 and just above, where once again I'd be watching for reversal patterns to engage on the short side. And if we do see a pullback, the target will be a move back into that daily bull bear zone 5400 to 5390. If we do pull back into there and we don't see any or sufficient demand, then the next area to the downside to pay attention to will be the 5350 to 5340 zone. Well, once again, I would anticipate in the near term we would likely see some support for a move back in to retest the daily bull bear zone from below. If we lose that initial support, then the next target on the downside is going to be into the 53.20 to 53.10 area. So it's really going to come down to this inflation print this afternoon for today's volatility and which way we are going to head. But as we know, around the release, we can see an outsized move that often gets corrected. The first move has a tendency to get corrected, so just be cognizant of that as we head into the print. In terms of the liquidity side of things, we can see this 54.80 and the 54.90 area does have liquidity developing, and the 54.50. So keep an eye on those areas as well. And let's see how we fare on any move up towards that 5,500, and see if the sellers are going to step back in. But like I say, if we don't, we can't hold 55.25, then focus really is going to shift to a move up to test into the 5,600. From a personal trading perspective, I am still running longs. I got stopped out on my dollar index trade overnight, but I've still got Bitcoin running. Got a couple of longs. I've adjusted stops, locking in some profits now in these longs, and I still have crude oil in play as well. But you can see I've started locking in some profits. Bitcoin is the only one that I've just moved the stop to entry. I'm going to try and let that one run and see if we can get back above the 70,000 level there. Again, I'm off the desk this afternoon and tomorrow afternoon, but normal service will resume on Monday. As always, traders, plan the trade the plan. Most importantly, manage your risk. Until next time, thanks very much.